Good morning again, ladies and gentlemen. For this video, we are going to need Appendix 5, the Fixed Asset Register. And what we're going to be doing is computing the depreciation for the year and by extension for the month so that we can do our depreciation journal. Now, depreciation is one of the year-end adjustments that you would have been exposed to earlier on in your accounting studies. For the project, one of the journals that you're going to have to do monthly is your depreciation journal. So we're going to be reviewing the depreciation journal. We're going to be reviewing how to compute that depreciation figure. And we're going to start with our fixed assets register. So right now I'm on the dashboard, the Moodle dashboard, and I'm going to click on the fixed asset register. Here we are. Now this fixed asset register is an Excel sheet, and we're actually going to remain here and do some computations on the sheet directly. Now let us see what our assets are at this point. On this sheet, we have a list of all of our assets and the historical cost. If you remember from accounting, one of the assumptions we have, or one of the principles we use in creating financial statements, is that the cost of the asset, the cost to construct the asset, the money you spend to buy the asset, that cost remains in the financial statements, in the general ledger, for as long as you have the asset. And even if the value goes up, you do not do a revaluation. In fact, the accounting standards only allows you to revalue assets that are investment properties. For example, if you own a hotel, for that matter. All right, so we have on our list computers, printers, furniture, vehicles, forklifts, software, buildings, land, copy machines. These are there at the 1st of January. However, in January, you actually buy a vehicle, a box truck, and you're going to be buying it for $400,000, and it's going to have a useful life of 10 years. But because of the depreciation policy where you're going to give it a full year's depreciation, even though you've bought it in January, mid-January, requires us to give it a full month's depreciation by extension. So I've included it in this Excel sheet so that we can just do one calculation. So apart from the historical cost, we have the acquisition dates. And let's change this to 2020, because notice the useful lives on these. Some of them are 2 years. So let's Control C, Control V. I have to change this. So you'd have started business 1st July in the acquisition of your assets. And notice now the useful life varies. The building has the longest useful life. The printers and computers, which you'd expect, are only there for 2 years. And the land has no useful life given, because land lasts forever and is not depreciated. So in our depreciation calculations, we will exclude. So what I'm going to be doing now is extending the worksheet and picking up or labeling this column, column F, the annual depreciation. And I'm going to wrap the text so that it can hold. Let's widen this a bit. Let's widen column F a bit. Okay. Now for the next column, I'm going to label it monthly depreciation. Again, I'm going to wrap the text, and I'm going to click on this button to top align. All right, good. So these are dollar values. Let's put them in to indicate that this is a money column. So based on your project instructions, all of your assets are to be depreciated using straight line method. And for the straight line method, if you remember, there are two methods really. For the first method, we can multiply the depreciation rate by the historical cost. That's one method of doing the straight line. For the other one, we take the historical cost, we subtract from that the salvage value, and then we divide by the number of years of useful life. And this is the one we're going to be using for this exercise. So it means therefore that, well, our salvage values, there are no salvage values. So this formula in option 2 reduces to cost divided by number of years of useful life. So therefore, to work out our annual depreciation, and by the way, let me just modify this and say it is equal to the annual depreciation. So let's work out our annual depreciation for each. Bearing in mind, remembering that land is not depreciated. So it's our cost, the historical cost, divided by the number of years useful life. Now, column D is not numbers, it's text. So we can't use formula to pick up the data in column D. So I'm just going to put 2. And for the one that are 2 years, I'll just copy those. Then I have to redo the ones, for 5 years, so equal furniture divided by 5 equals vehicles divided by 10. Now copy the one for 10 years. Likewise, the truck that you're going to buy in January. Building is given a useful life of 40 years. And the land we're going to not depreciate. So now I can total up. So I'm going to copy my formula. And I'm going to copy the formula to the next column in anticipation of my calculations. Now, so now we've worked out the annual depreciation. Let's go to the monthly. So it's just simply a matter of picking up the annual figures and dividing by 12. And then we can copy and paste everything here. So I've copied and I'm pasting. So what this tells me is that every month for the project for January, February, and March, this is going to be the monthly depreciation. But let's look at what the journal is going to be like. Now you recall that in designing your journal, you're going to have to indicate which general ledger accounts are going to be debited. You show that first. And which general ledger accounts are going to be credited. So we are going to debit one account called depreciation. I'm going to go into Sage and go into my chart of accounts to see what is the journal code. Click on list. What is the journal code for depreciation? So I'm scrolling down to my expense section of my list. bearing in mind that the expenses are listed in alphabetical order. Depreciation, here it is, 64,000. So this account, this expense account, is going to get the full the depreciation charge for every asset. So I'm just lumping everything in one. Let's get that 64,000. So this account is going to get the full depreciation expense. So this 43,000 will cover for all of the assets for the month of January, February, and March. But then we have accumulated depreciation for the different groups. So let's copy this. Let's do some changes. Let's take off the lines. What am I doing here now? What I'm going to be doing now is picking up, sorry. Let's undo. Sometimes it's not good to do shortcuts. All right, what I was trying to do was to save myself having to retype these names. Because what happens is that these credits here, to complete my journal entry, I have to pick up these individual figures to be credited to the respective accumulated depreciation accounts. Because the journal entry to record depreciation is debit depreciation expense, credit accumulated depreciation. So I'm picking up all the figures that are going to be credited to their respective accounts. Okay, so as usual, my totals must agree. My debits and my credits must agree in total. So here we have our 48,000, 43,000, sorry. 825. All right, so our journal construct is complete, except for the names of the accounts that are going to be credited. So for computers, I'm looking for accumulated depreciation computers. So I'm back on my account list and I'm scrolling back up, looking for my accumulated depreciation codes, and here they are. So the first one that I'm going to need is the one for computers, and I don't have it. Remember I said that I didn't modify my codes, and so I would need to have had accumulated depreciation computers included. That's the least. All right, so what I'm going to do here is to just put in the names, accumulated depreciation computers. You will know what the general ledger codes are because you would have modified yours. Okay, My machine is acting up as usual. Now the 2083, which is next, is for the printers. So we'll have accumulated depreciation, printers. So whatever that general ledger code is, that's going to get the credit. The next one is accumulated depreciation, furniture. Okay, you get the general gist. 4166, vehicles. Now, this is a figure for the vehicles that were there before January 1st, 2021. But remember, you bought a box truck, or you will be buying one in January, and the depreciation on that was $3,333.33. But that account also goes to accumulated depreciation vehicles. All right, I want to make that clear. All right, so we have forklift, accumulated depreciation, forklift. Then we have accumulated depreciation, software. Then we have buildings. And then we have copy machines. All right, so just to wrap up from this Excel sheet, we would debit all the expenses for each asset, depreciation expense for each asset to one account. But we break out the respective accumulated depreciation figures to the respective categories based on the asset. All right, so this is our journal. And so now, once we've finished this, we need to now go to Sage to post the journal. Now, you would have done one journal already, and that was your opening balances. To do the depreciation journal, you will go to Task and go to General Journal Entry. Now, you'll do one for each month, dated the end of the month. So one will be for January. The next one will be dated the 28th of February. And the last one will be dated the 31st of March. Okay. Now, the first journal we did, I gave it General Journal 01. This will be 02. The code for depreciation was, I think, 64,000. There it is. And I'm going to put here monthly depreciation expense. And the figure was 43,000. Let's peep and look. 43,825. It's on the debit side, sorry. 43,825. So now, as you can expect, my journal will not be completed because I had not done all my customizations. So I'm looking now for the accumulated depreciation on each. Let's do the one for furniture, which is going to be a credit. And for furniture, it was 8333.33. Sorry. 8333.33. So in the totals line, notice that we will have no other debits to enter, but we need to top up with the other debit entries, the other credit entries, sorry, so that when you're finished, the credit totals will match the 43,825. And the out of balance, which is more important, will be 0. So until this is 0, you can't click save and close. Because if I click save, this is the message I get. The general journal cannot be posted because it is out of balance. Okay, so I can't go any further in the demonstration with you because I did not complete the modification, but you get the general gist. So please use this opportunity to post your depreciation journal for January 31st, one for February 28th, and the last one for March 31st. So that will be your first transactions in your project. Okay, thank you very much. That should be it for the journal entry. Do you want to save it? No, don't want to save it. All right, so just to do a quick recap, this fixed asset schedule is Appendix 5. So I'm going to ask you to download it, do the respective calculations for annual and by extension monthly, and the figures that you get are going to help you to post. Now you can even use the data. You can probably freeze the pane here and pick up the figures, or you might want to run the exercise for yourself. The choice is yours. But importantly, you must post 3 journals, one for each month in the financial year, and they are month-end journals, so they must have the appropriate dates for the end of the month. Okay, I think that wraps up this section of the instructions. And guess what, people? We are ready for Appendix 6. We are ready for Appendix 6. So make sure that all the previous journals were done. And then I'm going to show you a few transactions. Now, how to post them. Now, there are a number of transactions in Appendix 6. A lot of them follow some basic steps, but there are some which you're going to have to go back to your Frank Wood basic accounting or even your intermediate financial accounting notes to see how to post. Now, I'm not going to show you how to post all the transactions because I have to leave back a little something for the interview. All right, but there are some basic transactions involving your customers and your vendors that you need to do, and that accounts for like 95% of your transactions. But there are some unusual ones that you'll have to cover in order to know how to record them in Sage. Okay, so I'm wrapping up now, and I will see you next in the videos showing you how to post the transactions from Appendix 6. All right, now particularly for this next set of videos, please print Appendix 6 because it will make life easier so you can track where you are in the process each time, because you're not going to do it in a day. It's going to be done over a series of days. So you need to keep track of where you are at the end. All right. And just as a reminder, I hope that you've been backing up your work, because you really should be backing up your records as soon as you have completed each task. All right. So have a good rest of the day and talk to you then.